Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor that you can find online at stevesaretsky.com. Welcome back to the show, Steve.
Yeah, thanks for having me on.
Steve, with a partial reopening in British Columbia, does that mean realtors can now hold open houses or a version of an open house now?
We're still not doing those. I think it's still kind of frowned upon. So basically, yeah, it's all private showings at this point, so no open houses.
Private showings. Now, did they change the rules so that you can do video presentations?
I mean, those have always been allowed. It's just like, obviously, not many people are making $1 million purchasing decisions strictly off just watching a video. So it might help weed out, some of the less serious people. But for the most part, anyone that's purchasing, locally anyways is wanting to go through physically still.
Yeah, it's nice not just to check out the house or the condo, but maybe walk through the neighborhood to see what you're getting into, and perhaps the video just doesn't give you all that. Yeah,
exactly.
So are we seeing a turnaround? Are people more interested in buying and selling?
I mean, the activity definitely picked up. My kind of view on that is basically this is kind of like our spring market. So normally the spring market would be March, April, May. Obviously, the shutdowns basically killed 2 of those months. So it seems like basically we're seeing an uptick in activity, a huge uptick in activity, both on the sell side and on the new listing side. So everyone's kind of cramming their plans in. So I suspect, June's going to be a fairly active month, and I think the summer will be. And then obviously, I think a lot of the question marks remain what the fall and the winter will look like, particularly as some of these government subsidies start to roll off.
Is there a big concern in the industry about once the deferred mortgage payments have to start to be paid that we're going to see a wave of defaults?
I think that's obviously a huge concern. I think that's going to be the real test for the housing market. I think right now what we're seeing is, again, fairly robust activity, at least in certain parts of the market, like the detached single-family, entry-level product that's going really quickly. You're seeing a lot of multiple offers in that aspect. But I think that, again, I feel that the real test of the market, if you're going to see a decline in home prices or, a more drawn out decline anyways, is going to be really, I think it's going to be in Q4. I think, mortgage deferrals will start to expire September, October. So, I think maybe you'll have a little bit more distress. I mean, obviously there's a lot of question marks with what the virus may or may not look like, in the, winter season, cold and flu season. Is it going to get worse? Is it going to pick up? Are people going to be more nervous? So I think there's a lot of question marks, obviously, as we head into, basically the end of the year. But I think as of right now, it's fairly smooth sailing in the summer months here.
Are there people here in the market, those who didn't have to be laid off or didn't get laid off, worked at home, didn't spend a whole lot of money because they didn't have to drive or get new clothing or buy meals out? Have they been able to start saving up maybe for a down payment or have the money? And could that be a new market to tap?
I'm not too sure about that. I think that obviously it's pretty evident if you just look at the data and even anecdotally is that a lot of the job loss has been concentrated, unfortunately, at the sort of lower end blue collar, obviously a lot of younger millennials kind of just more recently sort of starting their careers where they don't have as much, career capital built up. So those are the people that have been impacted the most. And I think that's kind of partially why, you're seeing, The entry-level condo market, for example, which was mostly millennial buyers, that's quite soft, and you're also seeing some softness in the rental market as well. So I think that those people have been most impacted, whereas the individuals or the families that are buying single-family houses for $1.6 million, I mean, those people are obviously further along in their career. They're less dispensable, so it seems like a lot of those individuals have retained their employment, and I think that is certainly keeping that market fairly robust. Now, again, is there a second wave of layoffs coming that is more concentrated or focused on the white-collar working class? Quite possibly. I think that's something we have to watch for, but that's kind of where we're at right now.
We'll have more with Steve Saretsky right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Steve Saretsky. Steve, are mortgage rates attractive right now?
Yeah, extremely attractive, obviously. I would say that, they've definitely come down. Not how much they normally would be in a typical recession. But, we've seen, you're seeing 5-year fixed mortgages on the uninsured side, probably around 2.3, 2.4 today. And we're seeing insurable mortgages, CMHC insured mortgages coming in around 2%. So obviously very, very low in that aspect. And I think that I think a lot of people are looking at that and saying, well, if rates are going to be low and they're going to stay low for the foreseeable future, as our almighty central banks are telling us, that people are looking at it and saying, well, I guess what is the alternative? So I think that's partially driving some of the housing demand.
Although the mortgage rates are cheap, are banks reluctant to lend mortgage money right now?
I think this is probably my biggest surprise so far is that, obviously at the beginning of the pandemic, everyone was like, well, how can banks lend in this environment? And credit's going to get shut off, and it's going to be really difficult to get a mortgage, and that's just going to crush the housing market. But what we're seeing right now is, I wouldn't say the banks are loose, but I definitely wouldn't say they're overly tight. If you want a mortgage and you got a job, you're going to get a mortgage. That's just what their banks are doing right now. Seems to me like they're kind of competing for new clients, new borrowers. Again, obviously, hey, if you're in the sales or commissions industry, or an industry that's been obviously impacted, you're an airline pilot, then of course the banks are going to be looking at you much more strictly, and it's going to be more difficult to get a loan. But certainly if you're in a lot of these other industries, banks are happily lending right now, which again for me is a little bit surprising. But I guess that maybe shows that they're fairly optimistic, I guess, on the outlook, or not concerned about lending in this environment.
I know price matters to a lot of people, but if the banks are still willing to lend right now, would you perhaps want to take advantage of that?
Well, again, I think it's up to everybody's individual basis, right? I think that rates are low. I believe personally that they're going to stay low for the foreseeable future. We're kind of in this debt trap where you can't really normalize rates without blowing everything up. So that's kind of where we're at. I do think that obviously, if someone's pulling the trigger today, they have to understand that, given the economic realities, that there are significant probabilities that prices could slide to the downside over the next 12 months. CMHC's come out publicly and stated their assumptions or their beliefs. again, I don't think anyone can sit here and accurately predict what's going to happen in the market, but I try to weigh things in probabilities perspective. Again, will prices decline? It's very quite possible, certainly, but I don't have a crystal ball. So I think people that are buying today, I think really have to have a longer term outlook. I mean, if you're looking to buy something and then, in 2 or 3 years, you're just going to trade up into a more expensive product and leverage that equity, we don't know where that price will be in 2 or 3 years. I do believe, obviously, over the longer run, 8 to 10 years, I think that, I think house prices will be, if not the same, they'll be higher.
Is there a certain category of client who, no matter what the price or the situation, they see a home and they want that because that's where they plan to live perhaps for the rest of their lives?
Yeah, I think that's kind of one of the big things is like it's, kind of maybe unlike the stock market is people that are buying single residential homes, to live in. It's such an emotional decision. I don't think there is a whole lot of analytical analysis involved where, they're calculating everything out to the cent and using, discounted cash flow models or, calculating cap rates. Most people buying their primary residence, it becomes strictly an emotional decision. So that's why we see, even in this environment right now, seeing, multiple offers is definitely a bit of a head scratcher, but I think it kind of points to the nature that, it is an emotional decision and people think, the average person doesn't really look at necessarily the economics of it. And I think a lot of people just look at it and say, well, I need a home for my family. And so it's just an emotional decision.
We'll have more with Steve Saretsky right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, for a person in the real estate industry right now, what kind of turmoil or stress have you been going under, and also your compatriots in the industry?
Well, I mean, it's certainly a bit of a tough outlook to kind of wrap your head around. Right now the market's picking up. That's great. We had this early start of the year was ripping hot. Then we had this huge shutdown. Everyone says, well, what's the rest of the year going to look like? It's going to be tough. Now we're seeing an uptick, and now, for me personally, I'm looking forward and saying, okay, well, what is, particularly again, what does Q4 look like? Is it going to be a really tough outlook? Is it going to be, really weak sales volumes? Are people going to be nervous, et cetera, et cetera? So I think, you just have to be really prudent, in the industry. I mean, you have to kind of budget appropriately. You have to kind of plan appropriately. I think building cash reserves right now is fairly, strategic. And, I think like any business I can say is that realtors right now, are working harder and arguably making less money. And I think that's like a lot of businesses right now with all these social distancing measures in place, is that everyone is working harder and everyone's making less money. And so it's definitely a tough year for the economy. And, I think that's kind of the biggest takeaway right now.
With the loss of international travel, Vancouver, Montreal, Toronto, always the big immigrant attractors in Canada, is that a factor that's been taken away? And is that one of the reasons why the real estate industry might take a while to get back on its feet, or if it's on its feet, start standing up?
I think that it's a big headwind for sure. I think that obviously, at least in the industry, everybody wanted to talk about and promote, how great and robust our population growth was. You simply couldn't build enough housing to support everybody, and on and on and on. And obviously, now what we're seeing is not only, immigration is obviously slowing, population growth is going to slow. We can already see that through some of the early numbers. If you look at permanent residents coming back into Canada, I think that number was, it was 2,000 or 3,000 when it would normally be 35,000 on average for a month. So, I think that that's kind of, what we're seeing a little bit in the rental market as well is that, we don't have tourism and you don't have, foreign students or, people coming here to visit and temporary work visas, et cetera, is that there's obviously less demand for rental housing. And, I think that's kind of what we're seeing right now is the rents are coming off a bit and we're having, a much needed, increase in the vacancy rate.
What about people who purchase properties hoping to rent them out through Airbnb? How have they been impacted?
I can't speak specifically on too many cases, but I imagine it's a pretty tough slog out there. I wish we had a better way to track, Airbnb units that were being rented and are now being listed on the MLS for sale. Again, you hear some of them anecdotally, but there's no real way that we can actively track that from a data perspective. But I certainly from what I can see is that, new listings, again, particularly in that condo space, are outpacing the number of sales. And so that's putting some downward pressure on pricing there.
Steve, thank you so much for chatting with us.
Yeah, my pleasure. Thanks for having me on, Jim.
My guest has been Steve Saretsky. He's a Vancouver-based realtor. You can find him online at stevesaretsky.com. He's also on Twitter at Steve Saretsky. If you have any questions for Steve or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of House Street Media Incorporated.